Show presented by Actions to Wealth. My name's Ainslie Club and I am your host for this evening. As always, we have a lineup of internationally acclaimed, well, just international.
Speak for yourself. I'd like to be acclaimed.
All right, so you're acclaimed in Singapore and the UK and Singapore. So that makes you internationally acclaimed, Julian. So
I am a hero in my own lunch hour. Spoken
so well by somebody in which month of you of lockdown?
I don't know, about month 86. So at some point I'm going to start to get to put ponytails in the back of my hair, because I'm at the point now where I'm at. So in New Zealand we obviously don't do lockdowns by half. So when we do a lockdown here, it is literally going into your bunker and sitting there and doing absolutely nothing, and you're only allowed postal deliveries from FedEx. So we can go to the supermarket, but that's it. So basically no hairdressers, guys, which is the biggest problem. No opportunity, because it's not essential items, to buy clothes. Although strangely, I did manage to get my new golf club putter turned up. So really beats me. This is the way life works in New Zealand. But the point is, I apologise to everybody for my lack of dress. I am appalling, and I have no clothes, and my hair is awful. So I will. Best we start talking about the world of trading, I think, and move on very quickly.
Over to you, Julian, and let's go and do a macro look.
Okay, so guys, look, thank you very much. Welcome everybody, wherever you are in the world. As always, you have a quick macro roundup for me. For those of you on my previous show, we spent 45 minutes going into things in slightly more detail, just having a quick scoot around the world. I think two things I want to talk about today is, number one, the fact that the US dollar is quite strong right now, and maybe there's a really fundamental reason for that. And the second one is, I just can't help myself. Sorry, Ainslie. I need to go look at the oil market and just look at the long-term seasonal patterns in the oil market to try and get a handle on what's happening next, because I was just talking to people about what a contango and a backwardation means. Now, guys, if you don't know what either of those means, you need to look at the previous show when the recording comes out. I go through it towards the end and tell you what a backwardation and a contango is and why it matters, right? We'll talk about that in a second. So quick, look, here's the rundown, right? US dollars. Why is the US dollar rallying? Well, many reasons. One could argue a flight to quality out of stock markets. So people are selling their US dollars, stocks, and God knows what they're doing with them. I don't know, sticking them in the bank account. But that flight to quality normally means that people panic, and when they panic, they liquidate positions not just in US dollars but everywhere. And so when you sell things everywhere, you tend to go home to your base currency, and that's often US dollars for people. So flight to quality, US dollar rallies. And you sort of go, well, yeah, I can sort of buy that, but it's a bit more difficult these days to try and define what a flight to quality is, because sometimes it's a flight to Ethereum and Bitcoin, as we well know. So here's the thing, right? Why don't we look at this from a much more simple angle, and we'll say, when we go and look at charts, what's been happening, right? So quick hands for those of you who are on the chat. Who is on the chat? There's one or two people out there. Guys who are out there, tell me what you thought the oil price was about a year ago. Does anybody know or have a guess? You don't even have to get it vaguely right. Just give me a reasonable number compared to where we are now. Can somebody please help me? Zero, Gary. Probably not a million miles away from it. I think it was slightly positive, 40-ish. Why don't we just take the average between 0 and 40 and come up with 20? What are we looking at today? The current price today is around about $80, right? So what does that mean? Oil is at least 3 times what it cost last year. So why is this important? Well, funnily enough, all the commodities in the world, the vast majority of them are invoiced. All the transactions are invoiced and settled in what currency? It's US dollars. Okay, so when the price of oil goes up, what do you need more of to pay for it, right? You need more US dollars. When the price of gas goes up, what do you need to pay for it? You need US dollars. When the price of coal goes up, and my God, guys, you should see the price of coal. Let me just show you that. I've got to share my screen because this is so impressive, right? You think Bitcoin's impressive. Coal has nothing on what coal has been doing. Let me just show you where coal has been going recently. Here we go. Okay, I'm just going to go to This is good old technical analysis here. We're going to go to something called a line chart, guys. We don't often show these on the screen, do we? So a year ago, here was the international price of coal down at 51 US dollars. Where are we today? 228 US dollars a ton. That means if you are buying things in US dollars, you are paying 4.5 times as much as you paid last year. That means you need quite a few dollars.
Are you sharing the screen?
Oh no! Oh my God! Sorry, I didn't press the magic button.
Thank you.
Thank you, team leader. Brilliant. This is why Ainslie is in the show with me tonight. It makes my life a hell of a lot easier. Now you see what I'm talking about, guys. Look at this. Now you can see that on the screen. That's coal futures on the screen, right? How impressive is that? I don't need to put a chart of oil up, but just to make everybody happy, that's exactly what I'm going to do. Okay, so this is what the price of oil has done over the last year. Vaguely about $20, as you guys estimated, all the way up to 75. You need US dollars for that. So is it surprising when we go and look at what has been happening to the euro the last few days? And I'll come off line charts, go back to our old friends, the bars, right? Go and look at the weeklies on this. What is going on the weekly charts? You can see this is the rally in US dollars. And over here, since the euro peaked in the beginning of 2021, in fact, think about this. With that extra demand for dollars, the other currencies have gone nowhere in the course of the last 9 months. How much stronger would they be if things weren't priced in US dollars? This, guys, is why quantitative easing is difficult to understand, because you look at this and you go, well, I don't understand, because quantitative easing, they put 4 trillion into the market. The dollar should be going down. Of course it should be going down, but you forget the golden rule. The golden rule is you've got to pay for everything in US dollars. So that's the reason why it isn't going down, because all those commodities are going up. Okay, guys, quick scoot around. I literally have about 5 seconds to finish this, right? So here's the thing, the seasonal pattern in oil. What are we looking at here? What happens in oil? First half of the year, bullish. What happened this year? First half of the year, oh my God, didn't that work as a trade, right? This has been a bullish pattern now that everybody's seen coming for the last 40 years. Why is it still working? Because it does. Okay, what happens from about May onwards, May through to July? What happens is the market consolidates. That yellow box you see in front of you, what's going on? Nothing. And that's really quite important. What happened is we went up, we went down, we went up again, and here we are. Decision point exactly this week is when the seasonals turn down for oil again. I'm sure Ainslie will fill you in on the daily pattern around this. Okay, but what is really going on is we are sitting here at the all-time highs. Why am I so not excited? I'm so not excited by the all-time highs. It's where sellers showed up last time. Let's have a quick look at what this means, right? Whilst the price has been rising, the volatility has also been rising. That's quite unusual. It's really unusual. That doesn't often happen. Look at this volatility going up here. Okay, so price rising, volatility picking up. Okay, what does that mean? That shouldn't happen in a bull market. Volatility falls, because it just steadily increases. But what we're seeing here is more violence, ups and downs, and okay, so there's something odd going on. People may be distributing price here. We may be seeing this. So all we've done with oil is go back to where sellers showed up before, right in front of the seasonal cliff. So here's the thing, right? When you think about this and what the future is going to be, what does it mean? For the next 3 or 4 months, it's a bearish time for oil. That doesn't mean to say it's going to go down, guys. If you think it's going to go up, you see a great buy signal, think about this from a seasonal point of view, control your risk. Don't put as much on, right? If it starts to go down, that's when you can load up and think about more aggressive stance, because it's in line with the seasonal pattern. That's my 2 seconds on the macro overview, which isn't really a macro overview. What I really was doing was talking about what's going on in oil and a couple of other currencies. I hope people are helped up by that explanation. Go the US dollar. While everything keeps going up, the US dollar is going to go up with it. Who cares about quantitative easing? It's a load of rubbish anyway.
Thank you for that insight, Jules. That was really, it was great.
You see, what happens, guys, is Ainslie never comes into the show this early, so she never seems to be getting quite excited. This is me getting quite excited, and what's more interesting is my hair's flopping around to make it even more melodramatic as well too. So this is the trouble with long hair. If it was shorter haircut, I would look vaguely more sensible. So here's the thing, guys. Good luck next week, and thank you all for listening.